In this video, I'm going to break down a massive misconception as to how many years you need to be self-employed as a limited company director when you're applying for a mortgage. My name's Anthony from Bolt Mortgages, and if you're self-employed and want to get on the property ladder or looking at moving home, press like and subscribe now. So if you've gone to speak to your bank or somebody that's applied for a mortgage within the last 10 to 15 years, there seems to be a huge misconception that you need to be self-employed for at least 3 years to be able to get yourself on a mortgage. And this is just not correct. Although there are some lenders out there that want you to be a limited company director for at least 3 years, this is far from the norm. Most lenders will want you to be a limited company director for at least the last 2 years. However, there are lenders out there that specialise in people that have just started up as a limited company director, and we only actually need 1 year's accounts to figure out how much it is you can borrow for your mortgage. So if you are looking at moving a lot sooner and don't want to wait for your second year's worth of accounts, there are options out there for you to be able to get on the property ladder now. So what income do they use when they are looking at assessing your income as a limited company director? So depending on which bank you speak to, a lot of banks you would speak to would say, look, we want to see how much money you've withdrawn from the business as director salary and dividends. And if they're looking at the average of the last 2 years, they'd add last 2 years up together and figure out what the average is to calculate how much income you can borrow. But as with most limited company directors, they don't always withdraw all the money from the business. They would keep profit within the business and not withdraw everything to their own personal name. Speaking to the correct lender will allow you to not only use the director's salary that you've taken from the business, but they can also look at the net profits that you've received to figure out how much it is you can borrow. And again, if you're going for a lender that looks at the last 2 years, they want to see the average of the net profits for the business and also the director's salary that you've paid. So as you can see, speaking to a lender who specialises in somebody that is self-employed and has been a limited company director can make a huge difference as to how much you can borrow on a mortgage. In fact, it could make or break you being able to get that perfect property or have to stay in renting for another year. So if you've been a sole trader and you've just set up your limited company within the last year, you can still get a mortgage, but it depends on which lender you look at. So for example, some lenders will be absolutely fine the fact you've just set up your limited company. So for example, me as a mortgage advisor, if I was a sole trader and then wanted to set up as a limited company, because I'm in the same industries, it's absolutely fine. However, if I was then to start a landscape gardening business from being a mortgage advisor, because I'm going from 2 separate industries, they wouldn't then look at the income and kind of use the previous year's accounts in assessing the income because it's a complete different business. My name's Anthony from Bolt Mortgages, and if you're self-employed as a limited company director, want to find out more details about the process, press like and subscribe now.